Welcome to Herd Mentality, a podcast from StoneX where we discuss global dairy markets and what's driving them. Remember that the trading of derivatives such as futures, options, and over-the-counter products or swaps may not be suitable for all investors. Derivatives trading involves substantial risk of loss, and past results are not necessarily indicative of future results. We're recording this Tuesday night, July 16th, U.S. time. It's Wednesday morning, July 17th. Singapore time. With me today is Yifan Li. He's our head of dairy for the Asia region. Yifan, you haven't been on the podcast before. Why don't you give us a little bit of your background?
Hi, Nate. I'm sitting in Singapore desk managing our dairy business brokerage and execution. So previously, I spent a couple of years before joining StoneX. I spent a couple of years working with dairy trading companies, and I've been with StoneX for 4 years, mainly doing our business in Southeast Asia, China, Middle East, and Oceania.
And I wanted to have you on today, and I was planning to have you on this week because all of the sentiment leading up to the GDT auction was bearish. Futures were down. Everybody, it was just a question of how much were the prices going to fall. And instead, the GDT index was actually up slightly for the event today. What was your feeling going into the auction?
Before the GDT auction, I was talking a lot to clients in Southeast Asia, to Oceania, and China. To be frank, I'm with you. Everybody's bearish on the last night GDT, and when we're looking at SGX and NZX dairy derivative, it's pointing down for sure. But it's a little bit surprised that the market didn't. I mean, the GDT index not really comes down, but when we're looking at whole milk powder and skim milk powder, it's pretty interesting. The whole milk powder index went down by 1.6%, and the skim milk powder index went down by 1.1%. So when I checked the regional breakdown, it's kind of interesting and almost in line with my expectation. China is not that keen to buy on GDT because they have a lot of pressure on their domestic production and also the consumption. Southeast Asia and the Middle East, relatively speaking, is doing well. So if we look at the whole milk powder, Southeast Asia and the Middle East put together, they bought more than 6,000 on the whole milk powder, and the skim milk powder they bought roughly around 3,000 metric ton. It's a pretty decent number, and before the auction, when I talked to the distributors, when I talked to the local end users, it sounds like they still have some pretty consistent, healthy demand. But China definitely is nobody shows interest to. To be fair, I should say it's like very limited people shows interest to buy from the GDT at the moment because they need to digest and consume the domestic product first.
We just got the second quarter production data, milk production data for China, and my forecast was production was going to be up 4.5%, a little bit of a slowdown from the 5.1% growth in the first quarter. But instead, Chinese milk production was reportedly only up 1.9% from last year in the second quarter. And to me, Chinese production growing 2 to 3% should be pretty neutral for prices, but the farm gate milk price in China has just absolutely continued to collapse. So if we believe that Chinese milk production has slowed down to just 2% growth in the second quarter, why are we still seeing the weakness in the farm gate milk price in China, and why aren't we seeing more buying by China on GDT?
I think the milk production to be honest, is that I think maybe there are several reasons that the Chinese milk dairy the liquid milk production on the second quarter is lower than the expectation. The climate definitely is one issue. So coming into the summer this year, China has been through a very extreme weather. The northern part of China is very dry and hot the in around May and June, and the southern China is in a big flood almost everywhere. So if we goes to like some of the major city in the south, let's say Guangzhou, they've been through like a rainy season, like non-stop rainy season for almost a month. So the season maybe is one reason that driven the liquid milk production not increase that much. And the second reason is the domestic demand is not there. And the normally coming into this period of time that China should stop spray drying the liquid milk into the milk powder. But when I talk to the people on the ground, they're telling me that uh, they the data or the number that they have collected is that every day in the past 2 weeks from the beginning of July to now is every day that dairy farm is that they're sending about 3 to 4 thousand metric ton liquid milk into the processing plant for the spray drying. The local demand is not improving anyhow, and with a pretty consistent dairy production, uh, yeah, it's some of the old inventory of the local homemade powder and the skimmed powder, they definitely need to consume and digest that first.
Yeah, I was also thinking that maybe the weather helped to push that or slow that production down more than expected in the second quarter. But I was wondering on the inventory, maybe production has slowed down, but there's still a lot of inventory overhang that's keeping those prices declining. Is your feeling that there's still a lot of inventory?
Talking about the China milk powder inventory, nobody really have a like really robust and solid number from those the government organization to the local conglomerates. Nobody have a clue, but we all trying to do some estimation, right? Last year we're talking about like 200,000 to 300,000. I believe with the season like coming off from the peak, the number should comes down. But when we looking at the price differential between imported homemade powder and the local produced homemade powder, the price differential is still huge. In China, in the past 1 or 2 weeks, people the resellers they quote in the secondary market imported oceanic milk powder, they're selling around 27,000 China yuan per metric ton, and the domestic produced homemade powder just offering around 17,000 China yuan per metric ton. The price differential is about 10,000. If we convert that to US dollar equivalent, the price differential is 1,300, more than 1,300 US dollar. So if we look at the price itself, it's a strong signal that the pressure has not been resolved, or is that the pressure has not been like decreased yet. So that's the reason I believe the domestic inventory is still quite high in China. And also like I keep hearing people are talking about when they buy from the local processors, they still can get they still can get a lot of the last year spray dried product.
So I know one thing that's been floated out there in the past year is the possibility that maybe China starts exporting home of powder. Have you heard of any product going into the export market?
Yeah, I think that's one of the hardest topic that everybody is talking in the past like half a year. So there's no doubt that China, China dairy processors, if they can't digest all the product that they need to find an outlet, right? So either that they hold their product, wait to expiration, and dump that to the feed buyer, which is like really bad for them. Alternatively, that they need to explore the opportunity to find an outlet to export. But the first market that they are targeting is Southeast Asia. But Southeast Asia is not it's a united like single market. It's like 6, 7, 8 like different countries. They all have like their regulation, and it's not that easy. For example, in Indonesia, they have the import permit. So every time if they want to buy something, instead they need to apply the import permit first. Malaysia have the DVS registration, and their halal system is also slightly different from the Indonesia, from China. And when we're talking about Thailand have the quota system for the dairy ingredient, and normally the quota will only be released around the beginning of the year and the middle of the year. So I heard some export to registration to, let's say, countries like Philippines, Vietnam, and people are trying to explore Singapore and Malaysia. But I mean, it's happening, but it's not that easy. So when we look at the export number for the past half year, 1 year, the only country that buying some decent volume from China is Nigeria. It's not in Southeast Asia. And also, like I heard some the Chinese conglomerates are discussing with Middle East buyer. Maybe that in the second half of this year we can see some of the export number going to Middle East, and a little bit more volume to Southeast Asia. But at the moment, there's nothing significant happening.
That's going to be an interesting development to watch with how cheap that powder is. You would think eventually it could find a home as long as the quality and characteristics were good.
The Chinese domestic produced home powder, the quality I believe is decent. And the fat content, the protein content are all higher than the standardized product. But the challenge is if we're talking about the quality itself, I think the biggest challenge is the staged bag, and it's not gas flushed product. So compared with Oceania and most of the European product, if they're selling to, let's say, the Southeast Asia, which all of the country in South Asia have a higher humidity and the temperature, the shelf life, yeah, if you are the buyer, you need to worry about the shelf life.
Yeah.
And also like China domestic produced homemade powder, the small content, the TPC, some of the smaller processors, their product have a slightly higher TPC and small.
Can you repeat that? Higher what?
TPC, total plate count, and small count.
Well, I want to thank you for your time and your insights today, Yifan.
Yep, thank you.
The StoneX Dairy team spans the US, EU, Asia, and Oceania, providing market intelligence, analysis, and forecasts through our interactive data platform called StoneX Plus, as well as full-service brokerage on the major dairy exchanges, the CME, EEX, and SGX. If you're interested in finding out more about our market intelligence or brokerage services, you can find more information on stonex.com.
This communication is issued in the European Economic Area by StoneX Financial Europe SA, SFE by the SFE presenters noted. StoneX is the trade name used by StoneX Group Inc. and all its associated entities and subsidiaries. StoneX Group Inc. companies provide financial services worldwide through its subsidiaries, including physical commodities, securities, exchange-traded and over-the-counter, under derivatives, risk management, global payments, and foreign exchange products in accordance with applicable law in the jurisdictions where services are provided. References to certain over-the-counter products or swaps are made on behalf of StoneX Markets, LLC SXM, a member of the National NO Futures Association NFA and provisionally registered with the U.S. Commodity Futures Trading Commission CFTC as a swap dealer. SXM products are designed only for individuals or firms who qualify under CFTC rules as an eligible contract participant and who have been accepted as customers of SXM. Wealth management is offered through SA Stone Wealth Management Inc., member FINRA/SIPC, and SA Stone Investment Advisors Inc., and SEC Registered Investment Advisor, both wholly owned subsidiaries of StoneX Group Inc. StoneX Financial Limited SFL is registered in England and Wales, company No. 5,616,586. SFL is authorized and regulated by the Financial Conduct Authority registration number FRN 446,717 to provide to professional and eligible customers including arrangement, execution and, where required, clearing derivative transactions in exchange-traded futures and options. SFL is also authorized to engage in the arrangement and execution of transactions in certain OTC products, certain securities trading, precious metals trading and payment services to eligible customers. SFL is authorized regulated by the Financial Conduct Authority under the Payment Services Regulations 2017 for the provision of payment services. SFL is a Category 1 ring dealing member of the London Metal Exchange. In addition, SFL also engages in other physically delivered commodities business and other general business activities which are unregulated and not required to be authorized by the Financial Conduct Authority. StoneX Financial Europe SA. SFE is a securities trading firm registered in the Grand Duchy of Luxembourg under Company No. RC Lux B 10821. SFE is authorized by the Luxembourg Ministry of Finance and regulated by the Commission de Surveillance du Secteur Financier Registration No. P00000-012 to carry out, inter alia, the activities of investment advisor, portfolio manager, professional acting on own account, broker in financial instruments, and commission agent. StoneX Financial T. Limited Co. Reg. No. 201130598 RSFP holds a capital market services license and is regulated by Monetary Authority of Singapore, IMASIB for dealing in exchange-traded derivatives contracts, OTC derivatives contracts and spot foreign exchange contracts for the purposes of leveraged foreign exchange trading. StoneX Financial HK Limited C. No. BCQ 152 SHK is regulated by the Hong Kong Securities and Futures Commission for dealing in futures contracts. StoneX Group Inc. acts as agent for SFL in New York with respect to its payment services business. StoneX Financial T. Limited acts as agent for SFL in Singapore with respect to its payment services business. The information herein is not a recommendation to trade nor investment research or an offer to buy or sell any derivative or security. It does not take into account your particular investment objectives, financial situation or needs and does not create a binding obligation on any of the StoneX Group Inc. of companies to enter into any transaction with you. You are advised to perform an independent investigation of any transaction to determine whether any transaction is suitable for you. This material should be construed as the solicitation of an account, order, and/or services provided by the FCM division of StoneX Financial Inc., SFI NFA ID 0476094 or StoneX Markets LLC SXM NFA ID 0449652 and represents the opinions and viewpoints of the individual authors or presenters and does not necessarily reflect the viewpoints of SFI or SXM. It does not constitute an individualized recommendation or take into account the particular trading objectives, financial situations, or needs of individual customers. Additionally, this material should not be construed as research material. The trading of derivatives such as futures, options, and over-the-counter OC products or swaps may not be suitable for all investors. Derivatives trading involves substantial risk of loss, and you should fully understand the risks prior to trading. Past results are not necessarily indicative of future results. All references to and discussion of OTC products or swaps are made solely on behalf of SXM. All references to futures and options on futures trading are made solely on behalf of SFI. SXM products are intended to be traded only by individuals or firms who qualify under CFTC rules as an eligible contract participant and who have been accepted as customers of SXM. SFI and SXM are not responsible for any redistribution of this material by third parties or any trading decisions taken by persons not intended to view this material. Information contained herein was obtained from sources believed to be reliable, but is not guaranteed as to its accuracy. Contact designated personnel from SFI or SXM for specific trading advice to meet your trading preferences. SFP may distribute analysis/report produced by its respective foreign affiliates within the StoneX Group of companies pursuant to an arrangement under Regulation 32C of the Financial Advisors Regulations. The analysis/report is only permitted to be distributed in Singapore to a person who is an accredited investor, expert investor, or an institutional investor as defined under Section 4A of the Securities Futures Act Singapore. Recipients should contact SFP at 656309100 for any matters arising from, or in connection with, the analysis or report distributed. StoneX Financial Pte Ltd Co. Reg. No. 201130598 RSFP is regulated by the Monetary Authority of Singapore MAST. SFP holds an MAS Capital Market Services license for dealing in securities, units in collective investment schemes, exchange-traded derivatives contracts, OTC derivatives contracts, and spot foreign exchange contracts for leveraged foreign exchange trading, and is an MAS-exempt financial advisor. StoneX Financial HK Limited C. No. BCQ 152 SHK is regulated by the Hong Kong Securities and Futures Commission for dealing in securities and dealing in futures contracts. StoneX Financial Thai Limited SFA Akin 141774727 holds an Australian financial service license and is regulated by the Australian Securities and Investments Commission AFSL 345646. StoneX Securities Co. Limited SSJ Co. Reg. No. 1040104719 is regulated by the Japanese Financial Services Agency as a Type I financial instruments business operator. Kanto Local Finance Bureau FIBO No. 291 is a member of the Financial Futures Association of Japan for dealing and broking FX and FX option transactions, and is a member of the Japan Securities Dealers Association for dealing and broking stock indices and option transactions. No part of this material may be copied or duplicated in any form by any means or redistributed without the prior written consent of StoneX Group Inc. Copyright 2024 StoneX Group Inc. All rights reserved.